All right, welcome back for the episode of Carnivore Trades. Today is Monday, October 23rd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So markets having a small gap down. We flushed for about the first 20 minutes and then we put in a low and we kind of just floated up into the middle of the day and now actually rolling over a little bit. So markets here down about 50 cents on the spiders. The triple Qs are green. So again, Magnificent 7 holding up the market here. Look at the Dow down 0.5%, and the Russell still cannot get out of its own way. Down 75 basis points. That did finally satisfy this head and shoulder target at that 165 handle. Low of the day, 164.65. That is not a buy signal. That is just a downside objective for your information. But it is pausing here. And what I would call this market here today on the spiders, this looks like a pause candle. So again, we're going to see we had a 1, 2, 3 down. Typically after that, you can get a counter trend day or sometimes it's a pause day. Today it looks more like a pause. If anything, in fact, here you go, 1, 2, 3 up. Yes, it was green there, but then you paused. And then obviously we tried to flag, which failed. Very common occurrence here, 1, 2, 3 down. Minor pause day, right? And then more continuation. So that's kind of what this looks like to me. I wouldn't rule out a little bit more of a bounce here, although the market's not very inspiring at the moment, and that's despite the rally in bond in bond prices and bonds and notes and yields pulling back. Obviously, big story of the day. Obviously, Bill Ackman covering his bond short. Pretty good trade, honestly. I thought it was chasing it a little bit, but it ended up working out. And you can see the ZB here. Pretty good outside move there. You can see we're kind of stuck in this channel of sorts. And looking at an hourly time frame here, just a straight grind down, and then we did have a nice outside move there. So good move there for bonds. Oversold here to the downside. Was it him covering that caused the rally, or was the tweet that caused the rally? I'm not so sure. But I do think there were some computers kind of chasing it afterwards, regardless, and a lot of retail perhaps as well, throwing their money into the hat on stocks. And you can notice if we take a look at the spiders, and if we just compare that with, I'm just going to use the 10-year. But you can see here intraday, let's use the ES so we can get a continuous. There we go. Look at that. So perfectly positive correlation. 10-year starts to come back in, spiders start to come back in, right? So you've seen that positive correlation there. Now, what's interesting is that bonds are still holding up into the end of the day, as you can see. ES coming in, and we're seeing, again, let's just look at a TLT. It's pulling back a little bit, but you're holding most of the gains, right? In fact, look at all the gains. We're holding all the gains. ZB up 1.15. Spiders are red, right? Little divergence there, right? So maybe something's going on here. I've talked about this last week, but keep an eye on those credit spreads. So that did widen a little bit last Friday. This is, again, of last Friday's data. This is not refreshed. I don't know if it's going to refresh today. Probably will. Yeah, it probably will tonight or after tomorrow. But in either case, talk to you guys about that 4.5 area. We're above that now. Again, it's not like an alarming level just yet, but it's okay. Now it's starting to look interesting, right? We went up, we pulled back. Now we're getting a continuation. Does this shoot up to 5 really quickly? If it does, I think something's going on. So again, if TLT is holding up and stocks are going down, what does that tell us, right? That means that there's a little bit of a correlation breakdown, especially if we continue to see relative strength out of utilities, right? And consumer staples, names like that. Could be a signal here. Additionally, we cover the banks every day, but take a look at the, KBWB, large bank ETF. This is bright red today, down 1%, and not that far off of a 52-week low. Continuing to break through this channel here. So not a good look there. And again, it does appear like there's some problems in the credit market. Look at VNQ today, new 52-week lows. You got to go back to COVID, really. So this is below that gap even. There's a gap all the way down at 69, 68.80. So again, kind of these interest rate sensitive sectors getting hit here. It could be confirming what we're seeing in credit spreads. Again, it's not anything to be alarmed at just yet, but if they start to widen very quickly, it probably will be. So just be aware of that. Short term, I wouldn't be against or wouldn't be surprised if we saw a little bit more of a bounce. I thought we would at least hold some of these gains here, but market's proving that they're weak right now. I talked about this last week, though. Everybody talking about an end of year rally. We get down to the 200, you bounce. How do you get those people out? You slice that 200. So I do think we'll see some more downside here. I don't think the lows are in. That, again, doesn't mean we can't see a little bit more of a continued relief rally over the next day or so, even though we're technically red right now. But I do think there is at least one more downside move here. Now I already have the low kind of penciled in for when that will happen. Obviously members have that, but we'll see what we get here. But right now, base case, you can make a case you just hit that 200 and backed off of it again. So if we're looking at yesterday's low, 421.08, we're going to close below that. So it's definitely price confirming below that 200. Market's closing 50 seconds here. So outside of a big outside move here, that is going to get closed below. So keep an eye on that. One area that everybody's watching is this little trend line on the Qs. Again, Qs are green. Again, Magnificent 7 holding up the market. That's been the story of the year. When they look back in the history books at 2023, they're going to say Magnificent 7, was the market, right? And continuing to hold that wedge area. That doesn't mean we can't go up to 363, test to 50 MA, and then roll back over. Just keep that in mind. We do have Microsoft and Google reporting tomorrow, Visa as well. So those are going to be kind of the first, well, not the first, I guess the second wave of big tech. We already had Netflix, ASML, and Tesla last week. But that'll be something to watch here. Market may be on the more muted side ahead of earnings. So is that something to watch here? But short term, 362, there's your 20 MA. And then above that, 365, 366. Those will be levels to watch on the Qs. You get a weekly close below this. Then things could get really interesting for the NASDAQ. But I'm not necessarily expecting that right now. But again, we'll watch those levels here. So yeah, Spider's closing below Friday's low after retesting the 200 moving average. And guess what? Okay, so we didn't close below 420.18, but we did close below Friday's low. So definitely some weakness there. And we did close below, guess what? This green bar here. So definitely some weakness here. The fact that we couldn't hold those gains. There's the SPX. Yeah, we closed 3 points below that there on the SPX. So, yeah, definitely a poor showing for the bulls. They had a chance to V-shape it earlier, and we were unable to hold those gains. So we'll see what we get tomorrow. But again, I'm of the opinion the lows aren't quite in yet. I will say, outside chance here, maybe you could get an abandoned baby, an island setup, but I would prefer a bigger gap there in that instance. And what I mean by that is if we gap and go tomorrow, you could make a case that there's a low in, but I'm not sure I love the price action here. Anyways, Dow down 0.5% on the day. This head and shoulder here still could be in play to 325, and the way it's looking, it can definitely get there. We stayed above this green bar here, so unlike the Spider, showing a little relative strength, but again, down 0.5% on the day. I will watch that area here for a potential downside target. Again, same thing with the Russell. That already hit its downside target. It does not make it a buy. Next real level is double bottom at 162.50. After that, believe it or not, I've got this going to 153. That's if we get there. So again, we'll see. The rest of the market needs to cooperate. If the rest of the market goes down, obviously the Russell's going to be weighted down with that. And that would be kind of your max downside for the Russell here. But again, relative weakness, and it's been there. It's been that way really all year long. And I mean, this is where, yeah, I mean, it's down 10 points for the year. So anyways, semiconductors here, managing to carve out a gain up 50 cents. Again, we'll talk about NVIDIA. Talked about this last week. A lot of people talking about the head and shoulders. No surprise it's getting a bounce. I am going to call this triggered on the weekly. So let's say by the end of the week, we come back down and close below it. That could still be in play. But if we close the week above this white trend line, we're going to say that pattern's negated, and then we'll just not pay attention to it anymore. Just talking about NVIDIA, because that is obviously an important pattern. If that were to trigger, it would take down not just the semis, but the whole market. But in any case, SMH here holding the 140 handle. Positives are you're above that pivot there. The negatives are if you lose this pivot Obviously, you'll have a little bit of support at the 200, but there's just a massive volume pocket, or I should say an air pocket, you know, down to 129, 130. And you guys know I do think that gets filled at some point. Anyways, IGV here holding that trend line, so we put that in last week, and we got to bounce off of that. Interesting how it kind of coincides with this downsloping trend line on the Qs. You see the IGV, I've been mentioning this, how it's a sector that's holding up relative strength-wise, and upsloping trend line coinciding with that triple Qs level. Short term, we'll look for, you know, let's just say 347, maybe 350. So back testing this trend line. If that fails, this can go down to 315. Just be aware of that. But IGV getting a bounce here, up 2 pennies on the day. Transports cannot get out of their own way, down 1.5. This is going to 14K. That could be a buy level. So unlike the Russell, I would call that not only a downside objective, but a possible buy level. So you see this down move here, kind of bear flagging for, you know, on the weekly time frame, and that broke out there. So it takes a lot of energy to make a bear flag fail. Essentially, that's the psychology behind it. So right in this area, that's where the institutions should be sitting, and it is getting really oversold too. And you've also got a trend line to go off of, so that could be an area of interest. It could even get there tomorrow if we really dump out. All right, so let's talk about rates here. So we'll start off with the 2-year as always. Again, backing off a little bit here. Spreads on the 2 and 10 coming back in just a little bit. But overall, they're still unwinding pretty nicely. I wouldn't make too much out of that. There's a 3-month 10-year. The 2-year finishing at 5.06. Trend is still up. I don't see any real problems with it. 5-year, same thing. And the 10-year, it is pulling back. It did make a new high here. This is starting to look top heavy on the bigger time frames, as is the 30-year, finishing right at 5%. But I cannot rule out, remember, there is a bond auction Wednesday. Everybody's talking about the lows in the bonds, lows in bonds now. And usually when everybody's calling it, right away, a lot of the time you get another kind of spike because you need to wash those people out. You need to scare those people out. You need to stop those people out. So I wouldn't rule out a move to 525, maybe even 550, but probably, you know, at least 525. That would take you kind of like to parity with the Fed funds rate. I think that would make sense. And again, there is an auction Wednesday, but like I said, a lot of people all of a sudden are now front running Bill Ackman, or I should say back running Bill Ackman. And it's a good outside move on ZB. It's a good one that best one we've had in a minute. But just like I said with the 200 moving average, when we had that big pump a few weeks ago, I said this could be a possibility here, and I said that for a reason, because too many people calling for end of year rally. What happens? You got to slice those people out. Slice the 200. That scares people. That gets the weak hands out. So, in regards to the 30-year. What if they do one of these, right? Right, Wednesday it's coming up. I'm imagining that auction isn't going to be good. So just be aware of that. But yeah, 30-year coming in, down 2% on the TYX. XHB actually held up okay. So here's a positive for housing. Granted, you did go into a lot of support down here. I said 70 bucks, didn't quite get there today. Doesn't mean it won't tomorrow. But again, remember, trend is down here now on XHB. We're below that 50-week moving average, but there is a lot of support in this area, 68.50 to 70 bucks. So we'll look for a low at some point in here, but you know, getting a bounce today, and again, we'll just leave it at that for now. VNQ can't get out of its own way, down another 1% here, below the 200-month moving average. Best thing I can give you right now is $70 whole round number on the monthly. XLF on the weaker side. This is a concern, down 20 cents. With credit spreads are widening, do you think that banks are going to get a bid or not, right? So XLF down 20 cents, lower lows there. There is still some support around 32, but it may need to go down to 31.50, so just be aware of that. KRE down 15 cents on the day. I do not like that chart. KBE down 12 cents on the day. I don't like that chart either. And then KBWB, the worst of them all. We'll just say a pierce of double bottom at this point. Broker dealers, that's got to go to 450. Over to crude here, down 2.3. Again, I don't think crude's doing a whole lot here. It's in backing and filling mode. You could make a case too, by the way. It's starting to potentially look that way. there might be a bearish inside bar. In fact, this is technically, basically a bearish inside bar. So if you stay in this channel, and as long as you don't close above 89.59 on the daily, you can make a case this could continue down. Again, if credit spreads widen, is that going to be bullish oil or bearish, right? So just things to keep in mind here. You'd still need to break through all this support here, but the next level would be down around 77, 78 if that were to play out. If this firms up and holds up and gets back above 89.59, well, then it can go higher. But right now, just watch that little channel there. We can get rid of this too, and we'll just keep that on. XLE here showing some weakness today. Again, it had a really nice push up. Don't like the lower highs here. We'll see how it does around 88. I don't really know if I have a good level here. In the short term, I'd probably just say, let's just take a fib here. Yeah, let's say 87.50. There's your 618. That's probably where it wants to get to. If that doesn't hold, you might round trip it to the gap, might round trip to 85, but I'm not doing anything with this. It's way too volatile right now. And again, if crude does come in, this is going to come in as well. XOP does have the slight higher high there, so that's in better shape. Right now, we'll see about short-term support around 145. And if that goes, you got to go all the way down to that gap there. OIH rolling back over as well. And again, you got that big weekly gap at 325 there, so that may need to get hit. I just think this is a big picture consolidation pattern, at least until proven otherwise. Uranium holding up there, CCJ up 8 cents. Nothing terrible, nothing great. It's holding up though, and URNM, same thing there. I think these need to do weekly consolidation. Nat gas getting a small bounce there today, up 2 pennies on the COMEX. Futures are, basically flat to negative, right into the support area. We'll see if that can get going into later this week. All right, so here's the oddball here. Dollar index, well, I shouldn't say the oddball, but last week it basically did nothing. And then today we rolled over pretty sharply again with bonds getting that bid. That makes sense. Maybe last week was just OPEX related and it was just going sideways because of that. Bottom line though, you did hold this green bar here. So 103.53, spot 5 on a close. So for right now, technically that's an inside bar bull pattern until proven otherwise. We take that low out, then you got the 50 MA there. And then you start looking at 105, 104.50, and 104. I think there's good support in that area for the DXY. But it did come in pretty sharply. And again, this is why you don't want to make... Everybody falls in love with these correlations, but they don't always work, right? So the dollar didn't do anything last week, and the market puked. And the dollar was down big today, and what did the market do? Couldn't even hold the gains, right? So it's not all about one thing or the other. That's why it's another kind of red flag here. If bonds continue to bid and stocks can't get a bid, then the market's really telling us something's going on here. But dollar index did come in. We'll watch that green bar from yesterday. Gold here pulling back as well, down 0.5%, but nothing terrible there, just stalling out at 2,000. We'll see about 1935, and then 1900 will be your support on the downside. If there is a credit spread blowout, I expect gold to go way lower, and then I'll be waiting very patiently to buy it when it does. Same thing with silver, although silver's holding up as well, at least right now in the short term, down 1.6. If this puts in a pattern here and consolidates, it can go higher. Platinum here also pausing, nothing terrible, nothing great there. Still looking for another push down with that, and palladium as well, but palladium finally getting a small bounce there. And then copper here was much lower earlier on and actually closed back up 0.5%, so nothing terrible, but I don't love that pattern. I don't like the lower lows. I don't like how you're below the moving average, and you guys know I'm looking for 340 minimum. All right, lastly on to Bitcoin. So Bitcoin's been the star here, and again, I talked about this, and this is still pumping right now. It was well off the highs last I checked. Let me just take a look here. Intraday, yeah, so it's getting a nice pump here in the last hour. But in any case, so big outside move there. We got above, we held the ETF news and then really all weekend pumped up, and we're above that key level on the weekly. If we close the week up here, Bitcoin, I think you give that a really strong upside bias. It does have a lot of weekly resistance in this area, so it may need to do some stalling out, but that monthly, that's not terrible. Nice inside bar pattern, and it's getting going. So we'll see if that can hold the gains. I talked about this last week. The last time Bitcoin really pumped like this was right here, right? Or excuse me, well, right there. But this was kind of this was the regional bank crisis, right? So we went from 20,000 all the way up to 29. 29.30, you know, in what, like a week? Banks are, I just showed you the banks. I just showed you credit spreads. I just showed you TLT. Is Bitcoin telling us something, right? Is gold telling us something? Could be something to watch there. But right now, weekly close above 30,086 is very bullish. Right now, short term though, into some resistance there at 31.5. But Bitcoin is acting really well. All right, lastly, let's cover the spiders again really quick. So again, down 73 cents there on the SPY. We did close below that green bar. We back checked to the 200 and it failed. So yeah, be careful with this market. Don't take anything for granted. There's a lot of cross currents going on. There's things that are changing. Dynamics are changing. All of a sudden, bonds are kind of positively correlated with stocks, but stocks unable to hold the gains. Dollar index starting to move down. Bitcoin acting differently. So be careful in this market here. I do not think the lows are in just yet. But again, we'll take it one day at a time. Resistance on the upside here, 20 moving average, and this trend line there, right around that 429, 430 handle on the spiders. Support, there's a lot in this area here still, but that remains to be seen. It'll be all about pattern. And again, like I said, with some of these indexes, the Dow, the Russell, they fit downside objectives, but they're not necessarily buys just yet. Be careful in this environment here. We also have a bond auction this week. We've got earnings, and then next week we have the FOMC. So a lot of action going on here. But again, be careful in this market. Anyways, guys, can wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.